Dr. Rajan, I won't use the word RBI and draw you to political, hot waters. But as an independent observer, India is growing at 6%, which is in and around its mean growth. So, for a country like India, where growth is 6%, fiscal deficit is coming under control, economy seems to be chugging along rather smartly. What, to your mind, really should be the ideal Forex reserve? I'm asking you this question because that, in a sense, is crucial on the way how currency could move and what kind of inflation rate dynamics we could have.
I think, unfortunately, with the world as it is, there's never a comfortable level where you can say, we're pretty much a fortress balance sheet. But I think, current levels are quite reasonable. They're approximately 17, 18% of GDP. That's quite reasonable. There Another way of measuring it is in relation to imports. How many months of imports? There we're okay. I think the we do have to pay some attention to our trade deficit, which is a little larger on the good side than we would feel comfortable with. In the last month, we saw a big expansion in gold imports, for example. Is that a trend or is it a blip? That's something to worry about because sometimes our upper middle class sees gold, as well as I guess across the economy, sees gold as a safe investment. And as they worry about the economy, they start moving into that. So those are things to be alert about. Um, I would also not take our debt as something to feel comfortable about. When the nominal growth rate in GDP was really high relative to uh, um, our interest rate, I think you feel more confident because as GDP grows, it brings down the debt to GDP. With nominal growth rates in GDP now coming to 8, 9%, and the interest rates on the debt being more like 6, 7%, there's not that much headroom for us in terms brought to us by growth. And large fiscal deficits can turn into an expansion in debt, which always is a warning sign for markets. So we have to be careful about not being overly, we need to be careful about the quality of spending. We can't sort of spend as if there's no constraint. And I think both on the central government side as well as on the state side, that kind of improvement in expenditure accompanied by fiscal restraint is warranted.
So, Dr. Rajan, I'd like to draw your attention to something which you referred to, which is that the Indian economy is not moving in a very linear manner. It is more like a K shape. Now, what does this K shape or post-COVID recovery mean for India's long-term trend line of 6%?
Well, I think the K-shaped recovery was clearer earlier, and now it's not clear what the shape is, which I'll come to in a second. Um, uh, the K-shape was, in a sense, the fact that the upper middle class was recovering quite strongly from the pandemic, while the lower middle class seemed to be hurting. And you can see it most clearly in the consumption numbers. For example, for passenger cars, you saw the sales of passenger cars sort of shoot up and exceed the pre-pandemic numbers. But you didn't see that happening with two-wheelers. In fact, only now do we see two-wheelers, which are bought by the middle class and lower middle class, come back to their pre-pandemic levels, right? So this was the K-shaped recovery that somehow the middle class was not feeling confident and didn't have the consumption power. And if they had the consumption power, some of it was supported by increasing levels of debt. Um, what you're seeing now is perhaps the upper middle class also seems to have exhausted some of the pandemic savings and seems to be a little more cautious about their spending. We're seeing passenger cars showing some signs of resistance, while two-wheelers, perhaps supported by a sort of stronger prospect of harvest and so on, are picking up once again. Again, just about flirting with their pre-pandemic levels. But this, the inequality in consumption spending should worry us because longer term we need to have a strong domestic market if we are to offset some of the uncertainties coming from the global market. Our goods exports, as we saw last month, are seeing some resistance. They're not growing at the pace they were growing. Of course, our service exports are doing really well, and that's something we could talk more about. But given that, I think we need a strong domestic market. I think some of this has to do with the future. How does our low middle class see the job situation? Many of them, especially kids who have been educated, are looking for decent jobs, and they're not finding it that easy, which suggests, youth unemployment is really high, and they're finding that they're all trying for the same thing, which is government jobs. And so you see these enormous numbers of applications for government jobs. For them, the government view that we have 3% unemployment is not very, satisfactory, because they're saying, I don't see 3%. I see so many people around me unemployed. So this is actually a really important concern for the government, for opposition parties, for state governments. How do we ensure that our youth, our population dividend, so to speak, is actually realized as opposed to wasted away because we can't find jobs for them?
So, Dr. Rajan, now that you've made a case for India's GDP growth, which is the 6% trendline growth, and barring that pandemic year, can I say that the next coming 5 years will not be strikingly different from the last 5 years? Because if India has to grow at 6%, well, that is our current rate, which means that we should not expect anything bumper from the economy?
No, look, we are still below the trend line if you draw, assuming there was no pandemic, right? We're about 1 year behind in terms of growth. That, of course, has effects on our youth. Our population doesn't wait because there's a pandemic. It was moderately affected by the tragic deaths in the pandemic, but very, very small relative to the overall growth of the economy. So there are lots of youth who are looking for those jobs, right? And the really important concern is, yes, at 6%, in a few years, we will overtake Japan, maybe within a year or two, depending on the exchange rate. We'll overtake Germany, both of which are stagnant. But after becoming the third largest economy in the world, we still have the question, how do we get rich before we get old? And India will start getting old faster than other countries because it has very little immigration into it. And you can see that in the South and the West, as the fertility rate falls with wealth, women don't have to want to have so many children, and a number of southern states are already saying we must up the population growth rate because we are shrinking or likely to shrink, even while the north and the east continue growing.
Dr. Rajan, an absolute honor and a pleasure, sir, to have you on ET Now. Best wishes once again for a great year ahead.
Well, Happy New Year to you and to all your listeners, and happy holiday season. Thank you very much, and good luck.